Welcome in, folks. Hope everybody's doing phenomenal out there as always. Nvidia stock has dropped about 10 percentage points just since yesterday morning, 10%. So we're going to speak about, is this run in Nvidia over, or has the death of Nvidia stock been greatly exaggerated? Then I want to react to three videos here. One is Tom Lee just went on CNBC less than an hour ago. I got a chance to record that clip, so I want to go ahead and react to that, watch that one with you guys, and share my opinions, perspectives there. Then I want to react to this one, Yardeni. We're going to hear what he has to say. I want to react to that one. And then last one up here, Nike, which is a stock I'm buying very aggressively here over the last couple months. This is a stock that got upgraded here today by Oppenheimer. We're going to hear why they went ahead and upgraded this stock here today. Appreciate y'all joining me as always. All I need from you guys is to smash that like button and make sure you subscribe to the channel if you're not already subscribed. Also, I did make moves in the Patreon portfolio today. If you want to see what moves I'm making each week, which stocks I'm buying and selling, then you can join my Patreon. I'll put that as a pinned comment down there today. I also have a tier in the Patreon that also has my Becoming Master of the Stock Market course attached to it. Okay, so there's like three different tiers. One's just for support, the other is to see the moves plus Discord, and the last one's with that course attached to it. Okay, that'll be pinned comment down there. So Nvidia stock, right off the bat here, down 10% just since yesterday morning, right? You know, what's my feeling on Nvidia here? Is this run over now at this point in time? Does this kind of mark the end of this insane bullish cycle this had? Which, if we back it up to a 1 year, I mean, it's insane, right? 194%. If we do a year to date on this baby, 162%. But it's really specifically all of a sudden since yesterday morning, the stocks just started dumping, right? You know, down 9.7%. So first off, is Nvidia's run over here? And when I say the run, I'm just speaking about kind of the shorter term run. I'm not talking about where Nvidia is going over the next 5-10 years. That's a whole different subject. If we're just focused on the short term run, is a short term run over? I would say likely not. Likely not. There's a bunch of rebalancing that has to go on. We're also coming upon the end of the quarter now at this point in time. So there's going to be a lot of weird stuff happening with stocks. Some pretty dramatic moves, like an Nvidia down 10% just since yesterday morning, right? And then you'll see explosions to the upside for certain stocks. And you could even see explosions for a stock like Nvidia. There's also a lot of triple witching options and all types of weird dynamics that are going on in the market right now. So I would not draw too much of a conclusion by any move that happens really over this next week. I wouldn't. And when it comes to Nvidia, the bottom line is momentum's really not over in this stock. Just because it goes down for a few days does not mean the momentum's over, because let's keep in mind Nvidia's had plenty of these moves where the stock will move down a little bit and then it comes right back. You could have thought Nvidia's move was done here when it went from 47 on a split adjusted basis down to 40, or right here when it went from 49 to 41, right? Or right here when it went from 46 down to 40, right? I mean, there's been a lot of time periods when you thought, and this was a most dramatic one here. This one was back in March. Stock went from 94 on a split adjusted basis all the way down to about 75, 76. So at the end of the day, Nvidia just goes higher and higher and higher, and that's kind of how I feel in the short term. At some point, the stock will have its we can call it, will have its peak, right? And when I say peak, once again, we're not talking about the 5 or 10 year peak or the 20-year peak for the stock. We're really talking about like the shorter term, like a multi-year peak, right? Let's call it a 2 to 3 year peak, right? And then that very much could come after the stock goes over 150 or goes to like a $200 level, right? And then the numbers keep coming in better and better, and then we kind of get into a peaking situation. So that's definitely very possible, but I don't think we've quite reached that peak yet. I think there's still a lot of people actually, believe it or not, there's still a lot of people underweight Nvidia. And keep in mind, once again, there's rebalancing that's about to happen. And Nvidia's, from what I've seen from all the rebalancing that needs to happen over this next, quarter, it's all positive for Nvidia from what I've seen. I haven't seen anything that says this is going to be a negative for Nvidia, because Nvidia's market cap's gone up so much. From what I've seen, every single ETF or index needs to actually buy more Nvidia stock over the next quarter, which is going to help the share price even more. So when I look at it across the board, there's also articles coming out at this point in time about Nvidia really building into more of a cloud provider as well, which would give them a more stable revenue stream and not just, let's call it, relying on selling chips to the cloud provider. So I think that's going to be a whole dynamic that's going to play out, that people are going to run with that narrative for the next few months. So the bottom line is, do I think Nvidia short-term topped? Likely no. Do I think it's long-term topped? Likely no either, certainly in regards to that, but even the short-term. So, talk to me at 150, talk to me at 200, then we can at least, I think, have a more realistic debate. But at 120 something, I don't think that's likely yet at this point in time, okay? So that's kind of my 2 cents in regards to that. Now let's go ahead, let's hear what Tom Lee had to say here just about an hour ago, and then we'll get into Yardeni, and then we'll get into Nike stock upgraded.
And head of research, and he's a CNBC contributor. It's great to see you.
Yeah.
I want to start in a little bit different way than normal, because Doug just made a really interesting point about millennials and how they're so conservative in their positions. And whether you've experienced this phenomenon firsthand or not, what do you say to those who need to be coaxed into a market that is ever at record highs after a run in stocks like Nvidia, like we've rarely before seen? I mean, is the water still safe?
I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyways. And I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up. So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, I'm sure you've seen it, that says, we're going to have permanently lower stock returns now. 4% a year is the most you should expect, and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right.
And stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
Mm-hmm. So is Nvidia the thing that you look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
There's a lot of people trying to top tick Nvidia, saying that they don't want to own it because it's expensive, but it's a 30 PE stock that sells something that no one else actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if we were discounting Nvidia being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped. But because everyone wants to sell Nvidia and try to call a top, I actually think there's still a lot of upside.
When I hear
exactly, that's the thing with Nvidia here, is the valuation is not crazy on this stock whatsoever. We go ahead and pull this baby up here on 1000xstocks.com. Forward P52. And keep in mind, this is taking into account analysts' expectations, right? And what has Nvidia been doing? Crushing analysts' expectations quarter after quarter after quarter. So a good probability that forward P is probably actually in the 40s right now, right? Which, is it above the market? Sure, but the Nvidia's growth is so far exceeding the market, right? It's not even close. And you look at a two-year out forward P, 35, it's probably closer to like a 28 or a 30, right? Which isn't that far above the market, and with growth rates significantly exceeding the market. So that's the exciting thing with Nvidia, and that's another reason why I say this run's probably not done yet, is you haven't pushed that valuation to something that is like, whoa, this is insane, like this is crazy, like I can't believe Nvidia is trading at this sort of forward P. It's not there yet. When you're exceeding the market growth rates by 10x, 20x, 30x, 50x, to be trading at 2x or so, a forward PE is not crazy at all. So that's why I think Nvidia could go to a $4 trillion or $5 trillion market cap before it kind of has a 2 to 3 year top. I think there's actually a decent probability of that. We've got a lot more multiple expansion there. So just some food for thought.
When I hear anecdotes, like I heard at a fundraising thing the other night about how all the local kids own Nvidia, what should I think when I hear that kind of information?
Well, it makes sense. I mean, Nvidia is the largest stock, so everyone should own it. It's almost like if someone said, "I'm selling because everyone owns the S&P." Everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down, and I only hear people saying the S&P's topping right now.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction. I think we've had a couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
To an extent, I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise rates.
What makes you think we might be mid-cycle and not later stages?
Well, there's a lot of things. First of all, leverage is still quite low. If you look at debt service ratio, it's not associated with business cycle peaks. It's actually more early cycle. If you look at the ISMs, they've just turned positive. That's generally an early cycle sign. I think the only thing that's late cycle in people's minds is that we made an all-time high, but S&Ps are going to make all-time highs mid-cycle, and they're going to make it all the way through late cycle.
Did AI bail us out? Because sort of thinking back to this dispersion that we've seen, okay, so the biggest names have all the earnings growth, the biggest names have a lot of the market growth, and everything else is a little bit more lackluster. And you just think, okay, if you rewind...
I think it would feel more late cycle if the Russell had been running, small caps had been running, and stocks in general were doing great. And the just reality is the stocks in general are not doing great. There's so many stocks that are at multi-year lows right now, near multi-year lows, near 52-week lows. The Russell hasn't done anything in years. We're talking about if you pull up a 4-year chart on the Russell, it's you could even go back to prior to Rona, which is 4.5 years ago, right? You could pull up a 4.5-year chart of the Russell. It's hardly gone up since then. You can pull up a 3-year chart of the Russell or a 3.5-year chart of the Russell, and it's down significantly. So therefore, you look at that, you look at smalls, you look at the Russell, you look at some of these other stocks, and that doesn't feel late cycle, to be honest. If S&P at all-time highs, Russell at all-time highs, and everything like that going on, then you might feel like that.
We were still working through post-pandemic gluts. You know what's been going on in the manufacturing sector. It's been a recession for 2.5 years. So did we get bailed out by AI? Is that what's extending the cycle?
I think people are doing some fake math. Also, 45% of the S&P has more than 10% earnings growth right now, which is the highest ratio in 3 years. Wow. 1 in 6 stocks is up more than 20% this year. 1 in 4 stocks is up more than 15%. I think people are distorting the fact that there's negative earnings coming from energy, basic materials, and healthcare. That's how you get that negative 7% growth outside the top 10. But healthcare's flipping in Q2 positive, energy's flipping positive in Q2, and materials. So the number of companies with double-digit earnings growth is going to really soar, actually.
So final question, to sort of ask the what would make you bearish question, does the trend have to break significantly for you to say, okay, fine, maybe if something like a mid-cycle correction is here, or does the economic data have to change, or some exogenous shock?
Well, I think that 3 signs of a peak are when incremental return on capital is 0. So when we are at a peak CapEx cycle, I don't think we're anywhere close. I think when we are extended on leverage, so whether it's debt service ratio or margin debt's still 20% below where it was in October 2021. And I think when sentiment turns, what you mentioned, and when people say that this market's unstoppable and won't ever go down, then I think we'll have a big drawdown.
But we are not there yet.
Yeah.
Tom, great to see you. Thanks for your time. We appreciate it. Tom Lee, Tyler.
Yeah.
Okay, let's go ahead and get into Ed Yardeni here.
Search, obviously, whether this rally's got.
In terms of Tom Lee's thoughts, none of that surprised me. That's pretty prototypical what I would expect from Tom Lee. There was nothing he said there that made me say, oh boy, like Tom Lee's got a new, fresh take on this. No, that was pretty what you would expect from Tom Lee right there.
Extended. Nice to see you. Welcome back.
Thank you very much, Scott.
You do point out that the tech sector at large has a valuation at near 31 times.
Correct.
What do I take from that in terms of a strategy or how I should be thinking about this market in the here and now?
Well, look, I think there are clear signs that we are in the early phase of a melt-up. And one of the signs is that I was expecting to see the S&P 500 at 5,400 by year-end, and here we are at 5,500. It's basically mid-year. So, I feel like the bull market is kind of left hoof marks all over me because it's been so powerful. Same thing happened to me last year. I thought we'd get to 4,600 By the middle of the year, we got there. By the end of the year, we got there by the middle of the year. I would say that this is a melt-up that is both earnings-led and valuation-led. If it was just all valuation-led, I'd be very concerned about too much speculative excesses. But the reality is these tech stocks have moved on better than expected earnings, and lots of news that suggests that the AI revolution really is boosting their earnings.
Sure, but there are valid questions that have been asked today, yesterday, and in days prior. For Nvidia, for example, whether it's over-earning. You've heard those words used. I find it interesting that...
Yeah, I mean, you look at the valuations of, the three biggest dogs. Let's just say the three big dogs. Let's say Nvidia, let's say Apple, right? And let's say Microsoft, because those are the three stocks that have over a $3 trillion market cap each. So we're talking about these stocks have a combined about... we could say $10 trillion of market cap. So these are the three big dogs that really run the show, right? And in terms of all of these three, it's not like they necessarily trade super cheap, but given their expected growth rates, over the next year or next 2 years, none of them trade actually rich. And that is what's really, really appealing in regards to these stocks. And that's why I think it's hard to make the bubble call, right? That a lot of people want to make that bubble call, right? But then you actually, differentiate between your opinion and what's the facts and what's expected to happen here. And it's like, that's really hard to make that call. Like I said, if Nvidia's trading at 150 forward P, it might feel different. If Apple's trading at a 50 forward P, it might feel different. If Microsoft's trading at 50, it might feel different, right? But at these valuations, it's like, okay, maybe they're not the greatest deal in the world, but it's certainly, given the growth rates these companies have putting up and likely will put up, it's hard to make a case that those are really overvalued, right?
You said we are in the early phases. This looks like the early phase of a melt-up. Some would look at the activity in Nvidia and say, well, that doesn't feel like the early phase of a melt-up. This feels like we're in, the later innings. We're about to bring in the closer.
Well, I think the comparisons that are being made are to the late 1990s, and we saw Cisco go straight up and then straight down. Back in those days, there were a lot more excesses than there are today. Back in the late 1990s, companies that made telecom equipment, many of them financed their buyers. In other words, there was seller financing, which is a very dangerous way to run a business. There was also a lot of dot-coms that got a first round of financing, bought a lot of equipment for the internet, and then didn't get the second round of financing. This time around, Nvidia's getting purchases from very rich technology companies that can certainly afford to buy its chips. Look, I think the GPU chip is basically a fast computer, and I think that while everybody's been trying to figure out what artificial intelligence is all about, I think it's really big data on speed and on steroids. And I think the whole idea that we're going to be moving and having some quantum computers, I think GPUs are the kind of the quantum computers. So we've got a technology here that we just saw Accenture, for example, report that some of its earnings were boosted by using AI.
I know everybody's going to claim that, though, Ed. You know that. Let me.
But the stock is up on legitimate news. Well, I mean, they didn't just make that up.
No, I get you, but I mean, a lot of stocks are up over a significant period of time because if you've mentioned AI, like they're going to start saying that hamburgers are being made more efficient because we utilize AI, and that's helping the French fries be crispier.
Hold on, Scott. You've got some real companies announcing some solid information. I mean, Dell is going to be providing some AI-related technologies to Elon Musk, and Elon Musk is going to put a lot of these technologies together to build a supercomputer. I know, I mean, he has more often than not delivered on what he said he was going to do, and I think he basically views GPUs as supercomputers when they're all put together, and I agree with that.
Okay, I wish I would have kept that piece going there. That was going to be interesting, but yeah, and I think Ed Yardeni makes good points there. I also like Scott's skepticism from two angles. One, I like it from just like, I love, kind of the pushback there of like, oh, this is overbloated, this is overblown. Everybody's just saying this, this and that. I like that perspective. Also, I like that perspective from the feeling of like, it's hard to make bubble calls when you still have so many people that feel like so skeptical, like, oh, I don't know about this thing, like, they're just saying that, that perspective is hard to make a bubble call when it seems like everybody's just in agreement of like, yes, this is the future, this is the big thing. That's when you feel a little bit more like, ooh, okay, maybe we're in bubble territory at this particular time, right? So, yeah, so anyways, that's kind of my perspective on that one. Now let's go ahead and get into Nike stock, which Nike's a stock I have, been buying very heavily the last couple months. I'm not planning to likely continue to buy this one very heavily in the short term. It doesn't look like it's the cheapest stock in the world, but what I'm expecting is I'm expecting them to actually blow out analyst expectations over really the back half of the year. So not this quarter they're about to report. It's really going to start next quarter in the back half of the year in 25 as well, right? And also Nike, you got to kind of, because it's such a great quality company over decade after decade after decade, right? And it really has no competitors. I mean, you can say, well, anybody that sells clothing or shoes is a competitor. Sure. There's really no competitor for Nike. There's never, everybody tries and they want to be the next Nike, but no one actually can do it, and it ends up being a lasting brand that's a serious competitor. They all end up falling to the wayside and they lose their cool, and then Nike just always stays cool. So when it comes to Nike, they should trade at a premium over the market in any market, just to be quite frank. So let's go ahead, let's jump into this one here.
Analyst at Oppenheimer, covers retail, hard lines, and broad lines, joins us to discuss why he's reinstating Nike as a top pick. Good to see you, Brian. Thanks for joining us.
Well, thanks for having me. I appreciate it.
You point out you think expectations have been de-risked and that they're set to rebound gradually. What makes you think so?
Well, look, I mean, stepping back, Nike has struggled for a while here. And I think what the real positive is, you have a senior management team now that is admitting its mistakes and putting in place significant repositioning efforts. So as I think about Nike as a company going forward, I really think we are at the cusp, of a significant repositioning effort that at some juncture is going to reestablish Nike basically as the dominant athleisure brand on the planet. Now, that's the company. From a stock perspective, with the purchase meeting, why I decided to upgrade the stock today, because we're talking to our investors. I think sentiment has got to a point where the market is now discount for near-term choppiness. In other words, the market knows things are going to be tough here a bit longer. But as you look out over the next several quarters, I think you start seeing better results at Nike, and I think that's what's going to drive the stock higher.
So it sounds like you think the story really is about...
It's just an easy buy, right? I mean, there's certain stocks in the market that are just easy buys, especially when they're at, Nike's been trading recently at multi-year lows. If we go ahead and pull up Nike here, you'll be able to see this here. So let's say Nike. Let's see Nike. So if we pull up a 5-year chart of the stock, I mean, it's been trading at the lowest level since the 2022 crash, right? When it got down to 83 there. And then obviously Rona crash there, got into the 60s. But you're not going to expect to, if you're comparing a stock just to crash periods, it's not always the best comp. So at the end of the day, Nike's an easy buy. It's almost like a recurring revenue stream because at the end of the day, people got to buy new clothes, new shoes all the time. Like, that's just what happens, right? And so it's almost like a recurring revenue stream. And the company's just so well positioned in the market. They remain well positioned, and there's really nothing to disrupt them. So it's an easy own. It's not like an Nvidia is a much harder own, I feel like, or like a chip stock, because you're kind of it feels like you're trying to time it out and like, ooh, where's the top going to be? For Nike, it feels like there's really never such thing as a top. It's just certain time periods the company's growing faster than other times, right? But that's really all it is. It's just like, okay, maybe 1 year they grow 10%, and EPS, and 1 year they grow EPS 1%, and 1 year they grow EPS 22%. But that's really all that's going on there. It's not like demand just fell off, like we're non-existent anymore or something like that. Like you might get into more of these commodity related stocks.
And innovation and management, as opposed to demand changing in any way in the near term.
Well, look, I think we do have a demand issue. I've been talking to, we just got off of our Oppenheimer, our consumer conference. I spent a lot of time talking to a number of consumer companies. I do think there is consumer squishiness out there. What we're hearing rather consistently now is, particularly within lower middle income shoppers, there is more, sort of say, hesitancy to make discretionary purchases. But
of course, after 3 years of inflation, that should come as no surprise to anybody.
for Nike, I think the primary issue has been internal. And I think the company, for a variety of reasons, just got off its innovation game. And I think that allowed other competitors to sort of say step up, maybe take some market share near term. But I think internally, I think Nike really has an opportunity to get back into product innovation, develop some great products, spur better demand.
In the scenario which you laid out in which eventually Nike reclaims the mantle as the best top-selling athletic apparel brand in the universe, does Hoka and On go away? Do they lose the share that they've gained so far? How does the competitive landscape?
They shouldn't have to go away. There's always going to be competitors, and there's going to be Adidas and Reebok, and there's going to be all these other guys, right? But at the end of the day, there's one Nike, and that's going to remain that.
Factor into that.
Well, look, I mean, it's a great question, Melissa. So the one, whenever I ask like that question or a question very similar to it, I remind our clients that this is a very, very big market, and frankly, a market that's expanding. I make the joke a lot. I mean, when I'm with clients now and I'm with colleagues at work, we're all wearing athletic shoes. You don't see as many loafers anymore. So the market is expanding. So the point I'm making is I think there's plenty of room for multiple successful players. Now, in my piece today, my associates did a real nice job of digging into this. We don't follow On and Hoka specifically. We did look at those businesses. And the real takeaway right now is, yes, those brands are getting a lot of, they're creating a lot of buzz. There's a lot of demand for them, but they're still very small. They're very, very small. Small relative to Nike. But again, to answer your question, I think the real point is the athleisure, the footwear market is plenty big to support multiple successful companies.
Do Olympics act as a catalyst this year, Brian, or is that generally overstated, do you think?
No, I think that's a big deal. And that's, again, another lot of people asking why now, why upgrade Nike now. The Olympics, the timing of the Olympics were very much in my thought process. I mean, Nike, they always are a big player around the Olympics. I think they're looking at this year's games in Paris as a real opportunity to showcase a reinvigorated brand. We're starting to get some product launches now that are coming out around the Olympics. I think the products look good, but I think the Olympics are very much a catalyst for Nike here.
Yeah, maybe a little overstated when it comes to that, but Nike's just a very, very easy buy. And if you want to see the stocks I'm buying and selling each week, you can join my Patreon, support my content through that. There'll be pinned comment down there. And once again, I do have one tier that has my Becoming Master Stock Market course attached to it. I have another tier that has a Discord chat as well. Okay, all right, guys, much love. Appreciate y'all joining me, and have a great day.